What's up, guys? Brendan from Market Makers Pro Trades video, my friends, where we cover the latest market news as well as market TA, my friends. And of course, we have a Pro Trades Discord where we trade these markets with trade signals, market intelligence, and a fantastic community. It is a capped room, guys. A capped room. Only a few hundred people will be there. Already over 100 people have joined in 2 weeks. We have 6,000 on the crypto side, but this room is small. So if you're interested, come try it out. No risk, no obligation. Link is in the video description. All right, let's jump into this. Why are the markets bearish in general, my friends? People can say it's Omicron. It's all because of Omicron. That's not true at all. In my opinion, and it's just an opinion, the markets are more afraid of the reaction than they are of the variant. We didn't see this type of reaction with the Delta variant, okay? Different countries react differently, different political classes, different states in my country react differently. You can see it even in countries like Australia, the West versus the East. You see it all over the world. And what happens in these equities markets? If you have a restaurant, a hotel, a chain of hotels, the airline industry in my country, they're talking about more restrictions for travel. So that will impact all of these industries. The markets are more afraid of the restrictions because the restrictions put more barriers between the customer and the business. And if you put more barriers, that usually turns out to be less revenue, okay? They're talking about more COVID testing before you get on a plane, after you get off the plane, lots of different things. Certain cities, certain states in my country make it very difficult to even go out to a restaurant. There's impacts all over the marketplace. And then you saw the CEOs. I gave you that update. Microsoft CEO selling half his portfolio, $300 million a week of Thanksgiving. Elon and then Bezos selling 12 billion combined. Because guys, if you understand the Wyckoff price cycle, if you're going to dump your assets, you got to dump it in the distribution box. You got to dump it into demand, because if everybody dumped at the same time, then the market would just fall apart. So you got to sell it when the market is hot, anticipating a decline from the distribution box down to markdown phase, which is where we are headed, my friends. Let's jump into some TA. The DXY, guys. So we track the DXY very closely, obviously, adhering perfectly to my Fibonacci pitchfork. As you can see, we've been on what I guess a little bit of a roller coaster ride. The DXY made multiple new highs for the year before it finally retraced, fell back, found some support in the Fibonacci heart line here, and then fell down, found some support in the 0.5, got displaced here to displaced moving averages, and now we are back up on support at 96.15, still a healthy dollar. Big meeting coming up for the Fed, December 14th, 15th. As you guys know, we talked about this last video. Powell's gone from a little bit of a dove to a little bit of a hawk. They're going to be looking at increasing taper. They're going to be looking at wrapping up that program. I think, the estimates, again, this is not official. The estimates are going to be March next year instead of June or July. So that can definitely, probably, high probability, I should say, really weaken the markets. You're cutting off the money supply, 36% more money in the marketplace since COVID started in 2020, March 2020. 36% more money in circulation. That's why you have so many overinflated assets like Rivian, like Lucid, the EV companies. Hedge funds, it's easy to borrow money when the rates are really low. They start raising rates, everything changes. You cut off the money printer, everything changes, guys. And that's what we target at Market Makers. Let's jump into the TA again. So where do we see the dollar going? It's still healthy right now. I would anticipate this moving back up as that meeting gets closer. We shall see. The one outside variant you have is the Omicron COVID variant, and markets react differently, countries react differently to that. So that's the outlier for the US dollar, but overall I do anticipate it getting stronger and stronger. Let's go ahead and look at the Dow, guys. The Dow finished up minus 0.48%. So the Dow finished up minus 0.48%. As I told you many videos now, we've been shorting it since November 8th. We had a nice decline. We got back above the 200 moving average, which was key. Okay, let's see where we are on Ichi. So Ichi, guys, shows support and resistance in cloud form. It's a visual imagery of support and resistance. We fell through our support cloud right at the Kumo twist area where you have go from resistance to support, fell below our moving averages. This is a daily time frame, guys. This takes a long time to print candles. You only get one a day. So you have to look at the smaller time frame, 4 hour, 1 hour, to get more of a current trend. But we did manage to get back above today, we got back above the 200 moving average, which is not bullish per se, but it was necessary to do so. Now you have to defeat resistance, which was support, and climb back up, okay? So we have to watch that closely. The SPX, guys, we've been shorting this multiple times in multiple time frames since November 10th. But as you can see, we are in this descension pattern. For those of you new to Fibonacci trading, what we do at Market Makers, amongst our other skill sets, is we provide trade signals based on Fibonacci patterns. There's subsets of Fibonacci patterns like harmonics, and we take all of this. Price must hit key points on the fib and it forms patterns because price moves in patterns. People call them waves, whatever you want to call them. Price moves in patterns or waves, and Fibonacci patterns capture that, and patterns, as you know, have a tendency to repeat themselves. So what you have in this pattern is you have price. This is a bullish pattern moving from X to A, down to B, up to C. It'll come down to D where it will reverse, okay? It will reverse and go back up, providing there's market sentiment, providing there's buyers in the market and there's high demand, it will reverse. So price is tracking to this pattern right now very beautifully. We have our Darvis volatility box here. We almost fell out of the box. We were able to rebound, and you can see we're holding on to this. Now, of note, what's of interest, for the S&P, for this pattern to trigger, you do have to lose your daily 200 moving average, which obviously can provide a lot of support. And if you lose that, it's a big moving average to lose. 6.5 months of trading data, my friends. You don't want to lose that. But if we did find support, what would our price level be? We'd be sitting at about 4140. 4140 on the S&P before you get a reversal, another 8% decline from where you currently bottomed out at, another 8% decline. So something we're tracking very closely, especially in the smaller time frames like the 4-hour, where I put a short in the room last night, my friends. Why would you short the S&P again? Well, looking at the tools that we have here on the screen, I have my fib circles, I have my pitchfork. You can see we are tracking beautifully to the pitchfork, and I have my Darvis box, okay? So we had the Darvis box as resistance, and you can see like almost to the dollar where it got rejected. It got above, it got rejected. And then I have my pitchfork, my range of motion for price to travel. And look how it's been adhering to this in the 4-hour time frame. Every time it gets above it, gets sold back down. Same up here, sold back down, sold back down. And so this is what I did. I shorted the S&P once again, and of course we fell down through the bottom of a Darvis box and got bought back up. And we're just going to be trading in this range, and we'll be applying more trades as they come to. Let's go ahead and look at a couple of different things here. Let's look at our Ichi really quickly, see where we are on support and resistance. A lot of resistance, and it's higher up, guys. Right now we have our moving average cloud, and you might not be able to see it very well. Our moving average cloud providing resistance to price right here. We have the heart line of the fib providing resistance to price. So there's a lot of resistance. This is still very bearish, even though the S&P finished up, what, 0.26%. We are in aftermarket hours right now. So even though it finished up 0.26%, it still has to tackle the moving averages, tackle all kinds of fib and volatility resistance, and then work its way back up through the Ichi cloud and trade back up here. Seems like a lot to do, doesn't it? It's because it is. And in cloud trading, my friends, which is Ichimoku, the size and shape of the clouds matter, and look how thick this is getting, okay? This is going to mean there's a lot of resistance, a visual representation of resistance for price to travel to. Let's look at the 1 hour. 1 hour, you can see more current trend. You have a little weak spot here in the resistance. This would be a good place for price to try to break through, but again, it has to re-enter the Darvis box and conquer the top of the pitchfork. And as you can see, every time we've gotten above it so far in trend, we fall back below into the pitchfork. So the 200 moving average, by the way, on the 1 hour time frames up here, again, that will provide resistance, and this will descend the longer it takes for price to move up. And we are being held back right now at the moment by the moving averages, as you can see right here, using the 0.5 pitchfork retracement line as support. And this is the dragon pattern in the 1 hour format that you can see, that we shorted in the 4 hour time frame. This is where we are right now, guys, on the S&P. Again, finished the week. It is Friday, my friends, and we finished, I guess you could say bearish, even though, what did the S&P finish at? Minus 0.11%. Pretty flat, but still bearish for the week. Let's look at the daily time frame. I was asked in YouTube comments, well, how is price holding where it's at now? I have that descension pattern I showed you on the daily. You can see here we had a bullish 5-0 pattern, which we provided in the room as well to our members, our traders, and we were able to get a little bit of a bounce off that. Not much. Price got above the 382. I don't anticipate a lot of support here for a bigger bounce because, again, you're trading in the bearish conditions, right? So that's the problem. All patterns will perform better in the correct market conditions. If you want to trade a bullish pattern, the market needs to be switching bullish. So right now I would classify this pattern as underperforming, but again, it has to do with the overall macro market conditions. And let's look at a couple trades in a room, guys. So as you guys know, we shorted Tesla. I'm really bearish on the EV stocks. They're highly overvalued. Rivian, one of the largest IPOs of all time, and they've made 156 cars. Shorted Tesla, had our Darvas box here. We broke through it. We made a double top, broke through the Darvas box. This dissension, by the way, if we complete this dissension from the bottom of the Darvas box, you're looking at minus 23%. Before we get a pattern reversal, you're looking at minus 23% on Tesla. And again, Michael Burry famously shorted Tesla last quarter. He said that the stock is way overvalued. Well, if he just would have waited, or he could have shot me a text message, because I definitely answered Michael Burry's call. I would have told him to wait for this pattern to complete, because we've been shorting this in the room, guys, since November 22nd, just before Thanksgiving. So this is a nice short, turned out to be a very nice pattern. Saw the double top forming, and we got our breakdown, and hopefully for the people in this short, we'll see it break down a little bit further. The irony here is I love the Cybertruck. I know people love it or hate it. I love the Cybertruck. I have one on order. So I like the company a lot. It's overvalued. And nothing's probably more overvalued than Rivian, except for maybe Lucid. So Lucid, I could not resist. I had to put a short out on Lucid. We formed the dragon pattern, and of course we got a nice dissension from Lucid because, again, yet another fledgling car company. These may be the future, guys, but these companies are just losing massive amounts of money. They survive on the influx of capital from hedge funds. They have barely any product to sell yet. So these companies are overvalued. And guys, at market makers, we're targeting assets, specifically when they're near their all-time high and the market is trading in a big bubble, a big asset bubble. When it starts to turn down, where is the liquidity? We talk about this in our live streams. The liquidity is on the way down. When you're very close to your all-time high, Lucid trading just below its all-time high, when you're very close to your all-time high, the most money to be made is on the way down. Could you make a new all-time high? You could. Things look bearish for December. Many analysts predicting crashes. Notably, not the big banks, of course, because they make the money by keeping the market strong. The people that are predicting this stuff have been very accurate in the past, and I happen to agree with them. All of this stuff is inflated, guys. All of it is inflated. So, guys, protect your money. Happy trading. Come check out our room. People are asking me where I trade. I trade on SimpleFX. You can trade stocks, you can trade commodities, and you can trade Forex there. The link is in the video description. You do get a $2,500 bonus for using my link plus 5% while I run that special as well. So you can check out SimpleFX. That link is there. And please come join our room. I would love to talk to you. If you guys would like to trade, if you want to learn how we trade, we teach you. We provide the trade signals. It's an awesome community. It's a tight-knit community. Come check us out, guys. Take care. Have a great weekend. Happy trading.